Hello and welcome to the Power of Passive Investing webinar series. We're thrilled to have an amazing guest today, Courtney Moeller. Courtney, welcome.
Oh, thank you so much for having me. It's such an honor.
We're excited to host you today, and we're excited to hear about your journey, and we're excited to talk about a great topic, which is oil and gas. We had the oil and gas interview, but I feel like it's been at least 3 to 4 years, so it's definitely time to refresh the knowledge and hear from an expert who has been living in oil and gas industry from the get-go. So Courtney, why don't we start with you sharing with our audience a little bit about yourself and how did you get to the point where you're today to do what you're doing now?
Yeah, that's a great question. And so I was born and raised in Midland, Texas, which is West Texas in the Permian Basin. The Permian Basin is the number one producing oil and gas field in the United States. And so my dad was a petroleum engineer. My brother drilled oil. My uncle has a well servicing company. And so it's really been something that has been a part of my life forever. And actually we drilled oil. Gosh, we lived in Pakistan, Abu Dhabi, and then my dad drilled in Jakarta for 20 years before he retired. So been all over the world drilling, and I inherited my dad's oil and gas company about 13 years ago, and we've continued to drill throughout West Texas, which has been great. And as I was going through a journey trying to figure out how to kind of diversify my own portfolio because everything I had was in oil and gas, I learned about syndication, thought I was going to syndicate real estate, figured out that I didn't understand anything about managing apartments or anything like that, but really the benefits of oil and gas and the tax benefits are very, very special, and it's really hard to find good oil and gas deals. So I thought, you know what, I'm just gonna stick with what I know and bring these opportunities to other people. So that it has landed me here, and it's been an exciting path and an exciting journey. I was in the Navy. I've written a couple of books and gotten to collaborate with some incredible people, and became an international best-selling author, which was not even on my bingo card, but it's been a pretty extraordinary journey.
I absolutely love it. Thank you for sharing your journey. And first and foremost, thank you so much for your service. Really appreciate that.
Thank you.
Um, it's an amazing. Your bio is definitely full of interesting and exciting facts. At least from a site, it definitely sounds very exciting. And I see the books in your background, so we know that you're a published author. Thanks for writing that and sharing your wisdom with other folks. But in terms of oil and gas, it's certainly been on the radar of many investors, especially now that we have a new administration in the House, the administration that supports drilling. So with that in mind, and before we get into the details and nitty-gritty details of oil and gas, let's talk a little bit about the economic outlook. Given what we know today about the new administration, what do you anticipate to see in the next couple of years or throughout the whole term of Trump's administration?
No, and I'm so glad you asked because this is probably the number one question that I've been getting for several months. And, typically with a Republican president, we have lower oil and gas prices. And for my type of investment where we're acquiring working interests in newly drilled wells, the price of oil matters. It impacts our returns. And even for mineral rights or anything else, if you're investing in anything that's producing oil, the price of the WTI, price of oil matters. And so, a lot of people are thinking, okay, we've got a new president. He keeps talking about drill, baby, drill. Are we just going to have this massive spigot of oil turned down and prices are going down? And I spent about a week and a half ago, I was at NAPE in Houston for this massive oil and gas conference, and I was honored to get to listen to Harold Hamm of Continental Resources and Mark Gordon, who is the governor of Wyoming, and they talked about, drill baby drill sounds good. The problem is we've got a lot of issues with our infrastructures and pipelines and refineries, and really we need to be doing some build baby build and get some of those infrastructures built in and done. And the other thing is, a lot of these companies can't ramp up the production. There's a significant cost barrier to that. These horizontal wells, which a lot of our areas are drilling horizontally, which means you go down 1 or 2 miles, and then you go out sideways another 1 or 2 miles, and they're very expensive, 10, $15 million a well. And just because somebody has said, hey, everybody go drill, there's a massive capital barrier. Some of the major companies can definitely do that, but every single company that I've talked to, they do not have any intentions of ramping up production. And so, yeah. So, and another thing that I would like to add on is right now it's been very difficult to get permits approved. And so we have not been doing the amount of drilling and exploration we have needed to do to keep up with current demands. And we are operating now at about a 5 million a barrel a day deficit. And so it's going to take time to catch up to that. And we're also entering into a pretty hardcore energy crisis. And so everything is really pointing to really good, strong oil prices for the next several years.
Incredible. Based on what you mentioned, why do you think the companies are not interested in increasing their operations, even if there is a capacity?
Well, part of it is because the infrastructure, our Keystone pipeline was shut down. We have a lot of things that need to be fixed and put into place, and everybody's operating very efficiently and profitably at this kind of $70 oil that we've been sitting at. If they start producing a whole bunch more, they're going to drive prices down. And it's not going to be immediate. I mean, even if everybody ramped up production, it will take time, but everybody's gotten very profitable and they're doing really well the way things are going now. So
Got it. So it only makes sense to continue at the current pace and keep the demand as high as it is now.
that, and we need to fix some of our infrastructure to even be able to manage more production. So we are the number one producers in the world right now at about 13 million barrels a day. And just for some perspective, we use 21 million barrels a day.
Wow.
The world as a whole uses about 105. And so we use a fifth of the world, production. But at 13 million barrels, we actually export more. We import more than what we produce. We actually export quite a bit because it's cheaper to refine the oil we're bringing in than it is to refine our own oil that we're producing. And so, in order to change that, we've got to fix refineries, we've got to fix pipelines. We need to fix and build some stuff that is, some of this stuff is over 100 years old, and we can't keep ramping up production and increasing those numbers without fixing that infrastructure.
Makes sense. So the shoemaker without the shoes saying does apply here as well.
Right, correct. Absolutely.
Interesting. So, in terms of the oil and gas industry as an investment, if someone, let's say, is very new to the industry and wants to invest, you mentioned that there are tax benefits. Why don't you share with our investors as to what are the different types of oil and gas investments that are out there that are available, and which ones specifically offer tax benefits and which ones do not?
Sure. Yeah, there's a handful of different ways you can invest. Some people are buying stocks, Exxon stock or something like that. I will tell you that is very different and not correlated to what's being drilled. So for me personally, we acquire working interests. And what that means is we're going in and we are helping cover the costs of drilling the wells. And then obviously we get the income, whatever portion that we purchase. Let's say we buy 10%, we cover 10% of the drilling costs, and then we get 10% of the income. Now, there's also something called mineral rights or royalties, and that's when you own, mineral rights in a certain area, and then you get royalties from anything that's drilled. So, but you're not responsible for covering any of the drilling costs, which is great. The difference in the two is there are no tax benefits in having those royalties or mineral rights, but the working interests, and this is why everybody loves the working interest so much, is they have the ability to offset any type of income, W-2 income, active income from other investments, capital gains, passive. It can offset anything. And then the other really great thing is all of the income from these working interests on these wells gets a 15% depletion allowance, which means that you're only paying taxes on 85% of the income for the life of the wells. And some of these are producing for 20, 30, 40 plus years.
which are excellent tax benefits. So let me just make it clear for our audience. So if someone wants to receive tax benefits against their ordinary income, which is any income taxable at their in their own current tax bracket, then they should consider looking potentially investing into the working interest, because that
Correct.
type of oil and gas investment does offer tax benefit. In addition to that 15% tax break that they get by default, but that's only year one, correct? You don't.
No, the depletion allowance, if you get it every single year for the life of the wells. Now, the depreciation you get from drilling the wells that goes against your ordinary income, that is in year one. You end up getting all of it, but the significant portion comes in year one. And like for my deals specifically, we live somewhere in the 80 to 90%. And which means on $100,000 investment, you'll get an $80 to $90,000 K1 loss the year that you invest.
So even though you get 15% depletion rate, you can still get 90%, which is over 100% of expense
Right.
tax of
So the
one.
yes, the part that offsets your active income is comes from something called intangible drilling costs, and that is the expenses like the manual and the fuel that go into drilling the wells. The depletion allowance is tied to the income from the wells. So you get your 80 to 90%, and every project is different.
Sure.
Your 80 to 90%, that's good from drilling the wells. And then on the income, you get that 15% depletion allowance every year on the income.
Amazing. Amazing. What about the returns in general? Are they compatible between mineral rights and working interest, or would you say that one's generally
They
used?
are. It really the only thing that's going to differ. I mean, every area is going to be a little bit different, and the wells are going to produce different amounts. Some areas, the wells are going to produce about 500,000 barrels of oil. Some are going to produce a million. If you're going into a project where they're reworking older wells, they might be looking at $100 a month, 100 barrels a month in production. So it really just depends on the interest that you own and how much of it there is and what types of wells you have. So there's a lot of different factors that play into that that impact the amount of income from those wells.
Got it. So if working interest offers tax advantages, why would someone invest in mineral rights if there are no tax advantages?
Well, it is nice to own, I have several thousand acres, mineral acres in West Texas, and they'll drill and I don't even know they've drilled, and then all of a sudden I get a $50,000 check in the mail, which is a great surprise. I don't have to be a part of I'm not responsible for any of the drilling costs. With the working interest, you're responsible for the drilling costs. And so, one of the projects we just finished was a 10% working interest, and it was about $100 million to drill those wells, and our cost of that was $10 million. Some people don't have $10 million to contribute to drilling wells, and so it really just kind of depends. But the other great thing about mineral rights, even though it doesn't have the tax benefits, you can actually 1031 real estate into mineral rights. And so some people end up in that situation because they're deferring or delaying, their taxes on their real estate deals.
That's a great benefit. And plus, another point here, if you're investing your IRA money and don't really care about tax benefits, then you might as well in mineral rights and save on
Sure.
those the costs as well. Um, in terms of the duration, what would you say is the average duration of mineral rights investments versus the working interest investment?
Well, every project is different. If you own the mineral rights, you own them forever. And so they can get passed on from generation to generation. My dad used to always tell me you never sell your mineral rights ever, because you just never know when somebody's going to drill or do something. Now, the working interest typically when we acquire that at the stage I acquire it, the companies have either already started drilling, they're, part way through the drilling process. And so but Either project, I mean, they can drill forever and ever and ever, or I mean, produce forever and ever. Now, there are some projects out there that will come up with an exit strategy and they'll drill and produce, and 5 years down the road, they'll exit. We don't do that. We come into projects that we expect really high production from, so we get returns very quickly. And then we just keep cashing those checks every month. And so I've got wells in my portfolio that have been producing for 50 years. And if I've 3 or 4x'd my money in a 7 year time frame and they're still going to send me checks every month for 20 more years, I will cash that every single month.
That's incredible. So it literally allows you to build that generational or multi-generational wealth that keeps growing and keeps producing.
Absolutely. Yes. And so I am looking to keep adding, more and more wells to our portfolio. And actually my personal strategy, I like to put it in oil and gas because we get it back pretty quickly. And then I take that initial capital back and then redeploy it into real estate. And so now within a 1 to 2 year time frame, I have funded an oil and gas deal and a real estate deal. And so it's really just about that velocity, of money.
Excellent. And as we all know that all the investments come with risks. So let's now switch gears a little bit and talk about the risks of both investments, mineral rights and working interest.
Sure. I love that you're going back and forth between the two. And so, really, with the mineral rights, there's not a whole lot of risk. You're not getting the tax benefits or any of that, but there's not a whole lot. I mean, if somebody just happens to drill, one day you're just going to start getting checks. With the working interest, you're taking on the liability of being the operator. And so, let's say something blows up at a well and somebody dies. I mean, there's the potential risk of a lawsuit there. Now, I am not just drilling wells with anybody. We're going in with, major companies like your Exxons and your Chevrons, major, multi-billion dollar companies that have really deep pockets and really good insurance. And fortunately, in my more than 100 wells in my portfolio, we've never had an issue. A lot of the time, a lot of the issues you see are with offshore drilling, a lot of the, rigs that you see out in the ocean. But you're taking on the liability of that. And the way we mitigate that some is, you come in as a general partner in year one, and then the following year, after you've gotten the tax benefits, we convert our investors to limited partners. But for that short time frame, there is that risk of what could potentially go wrong with these wells. And like I said, the companies carry really, really good insurance, and I've never had it be an issue, but never, never say never.
That's very true. So I think you answered my question, but just to reiterate for our audience, have you ever had any kind of legal lawsuit with any of the, not, okay, that's
I
good.
have not. And I would actually, there's a couple of other risks that I would like to point out as well.
Please.
With a working interest, there is a monthly operating expense. We are responsible for our, whatever percentage we own. There's monthly cost to keeping those rigs going. And so we also are responsible for covering those monthly costs. So and this is where the price of oil really matters and why you need to know what the break-even price of oil is for your project. And so most of ours are in about the $37 range. If oil goes below $37, we're not making enough money to cover our monthly operating expenses, and we could potentially have to come out of pocket for that. And so it's very important to know that that can happen. I can tell you in the last 13 years, I had it happen one time back in 2016. So I do know some people that had it happen to them during 2020. Fortunately, it did not hit me. So every project is going to be a little bit different, but just something to be very well aware of. And the whoever you're investing with, you need to ask them, do they have contingency money for that? Or, how do they handle that? Do they pass it on to the investors? Are they able to cover it? What does that look like? And then the only other thing that I would say is with every single project, whether your mineral rights or working interest, if you're drilling wells, I don't care how good the company is, nobody can guarantee what those wells are going to produce and what the price of oil is going to do, because whether regardless of which type of interest you own, the price of oil and how well the wells produce are going to impact the project, and nobody really has any control over that. You have reserves that you expect to be there. Maybe you think there's 1 million barrels of oil there, but you don't actually know how the wells are going to perform, and you can't guarantee it until they start coming online. I mean, you can't guarantee anything, but anybody that's guaranteeing being able to recover a certain amount of oil or return, there's too many outside factors that impact that we have no control over.
Courtney, you brought up a few good points, so I wanted to ask you a follow-up question. So, when you invest in oil and gas, either working interest or mineral rights, and if the answer is different, feel free to elaborate. Um, how long would it take before you start seeing the interest being paid to you?
Yeah, a lot of the mineral rights, like I said, I they don't even notify me when they're even doing anything. I mean, a lot of times I don't even know that unless you're following the permitting processes and staying on the sites, a lot of times that they don't even notify me that drilling's even happened until until it's already finished. Now, there's ways to mitigate that. I don't have time to manage it, but from the time the timeline's a really good question. From, let's say somebody's going to drill some wells, from the time they permit it till they actually start drilling is about 6 months. And then from the time they start drilling till the time the wells come online and start producing is typically about three more. So we like to come in where they've already started drilling. So we're not looking, from the most part, worst case scenario, from the time we come online, it's about 6 months before we start getting, distributions. And then they're monthly, which is fantastic. But if you're coming on at the beginning of the project before permitting, it could be, 9 months to a year before you start getting distributions.
Are there advantages to come into the project before permitting?
Oh, that's such a great question. So, I like to come in after that has happened, where we pay more for our projects, which means we're giving up some of our upside. Most of our stuff is gonna 3 or 4x, which I'm very happy with. If we came back in, before the permitting process happened, we probably are looking at more of a 7 or 8x, which is much nicer. We pay a lot more for it, but when we've already drilled, I'm literally buying a project right now. It's 5 wells. 2 of the wells have been drilled, and we already have confirmed commercially producible oil in both of those wells. So I know we are not going to have dry wells. So we've gotten rid of the majority of the time to get it completed. I mean, those will start paying out here within, they'll be online within another 30 days. And then I would think probably within 3 months, those are going to start distributions. So we've cut down the timeline significantly. We know we have oil, so we've reduced a lot of risk with the permitting process and everything, because that's where you see a lot of delays and issues. We've bypassed all of that. And now we're about to come online and start getting distributions. So like I said, we pay more for it. We give up some of the upside, but I feel like we've reduced a lot of the risk that way.
Makes sense, and there's a higher probability of being paid sooner, even
Right.
though the return may be smaller. So, in terms of the returns, you kind of started answering my next question. A lot of our audience are real estate investors, and they're used to a lot of quantitative terms such as cash on cash, ROI, IRR, and so forth. While I understand it may not be feasible to offer that in oil and gas, and you mentioned 3x and 4x and so forth. And for our listeners that are not familiar with that, so 3x just means 3 times your investment, and 4x means 4 times your investment, and so forth. So, how would that work? Or rather, the question would be, over what period of time 3 to 4x might be possible?
Yeah, this is a great question. And this is how oil and gas is very different from real estate. Because I feel like you get the real estate, it's typically quarterly distributions, and really your upside comes on the divestiture, 5 years down the road, and I'm just averaging this out. I know it differs. So oil and gas, we invest, we are looking to return that initial investment in a 12 to 24 month time frame. And this is where the price of oil comes into play and that sort of thing. And then we are looking for, another 2x, another couple of years after that, and then another X, within a 3-year time frame after that. So we're talking, I'm just going to call it 3x within about a 7-ish year time frame, somewhere in that neighborhood. And so this is where I was saying I like to deploy it into oil and gas, get the tax benefits, get our money back, that initial investment in 12 to 24 months, and then redeploy it into real estate because now it's going to keep on working and keep multiplying. And now I've got some real estate in there too.
That's awesome. And thank you so much for mentioning that and for breaking down the potential risks that are involved in sharing the risk mitigation strategy with our audience. Courtney, where our audience can learn more about you and your offerings in general if they want to reach out?
Yeah, that's so I have an oil and gas report that you can pick up at oilandgasreport.net. It goes into detail on the tax benefits and things like that, just some economic outlook. And there's not any deal information in there, but it has my email, and that's the best way to contact me, Courtney at courtneymoeller.com.
Okay, so it's oilandgas.net or
Um,
Courtney at courtneymiller.net.
it's oilandgasreport.net
Okay.
and then Courtney at courtneymoeller.com.
Okay, excellent. Very good. And as far as social media, are you on LinkedIn or
I
Facebook?
am on LinkedIn. I'm not as active as I would like to be, and I try to keep up with my messages. I will get to them, but I can't promise that it'll be timely.
No problem. No, that's fine. Then the last question, it's more of a personal question that we always ask our interviewees is, how do you like to give back?
Oh, this is a great question. So I give a lot of educational stuff. I feel like education's a big one. I want to help as many people as possible. I'm hosting my second annual Advanced Tax Strategy Summit that'll be coming up here soon, and I offer that free. In fact, I'm going to offer it free for the whole year so that people can tap into that. And my husband and I just finished having a conversation about how he's a police officer, and police officers don't make a whole lot of money, and they've got a lot of really great people doing some really great things at their department. And so we are working on putting together a fund to help them purchase homes and things like that that have been a pretty
Mhm.
big barrier. So I'm pretty excited about that.
Yeah, no, that's amazing, and thank you for doing that and for helping your local community with that. That's incredible. Courtney, thank you so much. You're certainly a wealth of information, and it's refreshing to hear about oil and gas industry, especially nowadays with a bright future ahead. And I'm sure some of our listeners will want to reach out and learn more about you and your offerings. Thank you
Yeah.
so
Well,
much.
thank you for having me.
It's our pleasure. Bye.